Welcome back to Trading 360. Time for our 360 round. We're diving into all things Uber after its latest earnings report. For that, I want to bring in our panel. We've got Eric Clark, CIO, Brands Portfolio Manager, AccuVest Global Advisors, and Jamie Meyers, Analyst, Laffer Tangler Investments. Thank you both so much for joining us today. Why don't we start out big picture here? Mixed bag over at Uber in terms of its results. They beat on the bottom line. They missed revenue expectations. Revenue coming in at just over $11.5 billion. EPS 83 cents a share. Why don't we start out with you, Jamie, your take overall?
Sure. Good morning. Thank you for having me. So Uber is a member of our 12 Best Ideas portfolio, and these results were actually pretty strong in our opinion. While the company missed by less than 1% on gross bookings and revenues, the other metrics were strong. Monthly active platform customers were up 14%. Gross bookings still grew 18% in constant currency. Mobility was up 20. Delivery was up 18. So we're actually very happy with the results. And looking forward, we saw strong, confident management on the call, and we sort of think that the company is well positioned to continue growing EBITDA, continue growing cash flow, and expanding margins moving forward.
Eric, do you share similar views, or what are your sentiments?
I absolutely do. I mean, listen, I'll use Disney as an analogy. If Uber went into the print off 17% like Disney, the stock would be up 5% or so. So I thought the numbers were great. We don't care about, each quarter. It's just a building over time of a bigger opportunity, good margin expansion, good trip growth, solid bookings, and a visionary management. So I love the quarter, and we took advantage when the stock was down 5 or 6% to add a little bit more.
Jamie, do you think that the staying power that we see, for instance, in the Uber Eats side of the business has legs, especially if we see any kind of deterioration in the economic picture when it comes to consumers?
So interestingly enough, they talked about the consumer on the call, and what they're seeing is really no trade down, and in fact, more spending internationally. The results were driven by trips and not by price, which is important because their ability to raise prices is limited. So we do think it has staying power. Delivery, instant delivery, and instant gratification, frankly, is becoming the standard in the United States and globally. So looking forward, we do think that those businesses are going to continue to grow, and importantly, so does management.
Do you have similar thoughts, Eric, especially when you think about, for instance, Uber One? It is a subscription business, but do you see anecdotally some consumers who talk about, okay, I need to cut down on some of my subscriptions somewhere?
Absolutely. I mean, listen, it's still a discretionary service, but it's something that we really love. And so if we go into a proper recession, certainly on the margin, some people will make that decision. But it's such a dominant company in a really important category with a lot of growth ahead. And here's a fun fact, for free cash flow, they did $2.2 billion. Tesla's 4 times larger by market cap, and Uber did 4 times the free cash flow in a quarter. That says something about this business.
No, that's some great perspective, especially because one of the concerns for Uber had been for a while the threat of autonomous vehicles, and what would Tesla's progress in that department do to impact Uber? Jamie, I want to hear your final thought, I guess, about that, and then what makes this continue to be on your list as the 12 best ideas.
So we don't think there's going to be one winner in autonomy. We think there's going to be multiple winners. And full disclosure, we do own Tesla as well. But Uber certainly has an advantage with the scale of their network. Their ride-hailing app is second to none. And the company's doing a great job expanding partnerships. It'll be very interesting to see how Tesla compares to Waymo when it comes to Austin, as Uber just launched in Austin a little while ago. But we do think there are going to be multiple winners, and Uber is certainly well positioned to be one of those.
Okay, Uber positioned to be one of those, and although shares are off today, they are certainly higher for the year. They've had quite the run this year. Our thanks to Jamie Meyers, Laffer Tangler Investments, and Eric Clark, AccuVest Global Advisors. Thank you both.